with regards to the centralized exchanges, I mean, everything is built on trust. As you said with the UK banks, we put our money in the banks because we trust the banks not to go into liquidation. Which unfortunately, as you get scenarios like 2008, where people realise that these banks are just companies. So don't get me wrong, they'll potentially get a government bailout, as they always do. But there is always that risk. But that's part and parcel really of, I think, both finance and just both life, to be honest with you.
Yeah, I think, the sort of growth that the global economy has really had, especially UK, US, over the past, since the 70s really, when the home mortgages really started to come in, and all the sort of, once we got taken off the gold standard and the sort of derivative market went crazy. And I think even in 2008, it was like 1 quadrillion, and to even try and fathom what that number is insane. So I don't really know where it is today, but we're sort of addicted to that growth, and we're addicted to QE, the current global economy. So where do you really see, I think even the 75 basis point rate hike, I think that's been the biggest since 1984, right? So what do you see from the macro side of stuff, global economy, over the next 18 to 24 months?
I mean, again, today's inflation figure, obviously, CPI was 9.1. That's the highest since 1981. Yeah, I was minus 13 in 1981. So I've never known an era like we're about to see. Obviously, I'm quite a keen political historian, should we say, which obviously then ties into monetary policies and things like that. I think what we're going to see over the next 18 to 24 months, I think the main thing to remember is that they never really, they didn't really raise rates effectively until CPI hit 7%. That's a long way off. The Fed is so far behind the curve, as is every central bank, to be perfectly honest. Yeah. That a 75 basis point rate hike today, 1 next month, another 3 this year, for example, it could possibly not be enough to really get inflation under control. And I think Dylan said, I think on one of your podcasts recently, maybe in March, it'd be difficult to see Fed funds rate get to 2%. Yeah, I think it's more likely to get to 4, 5. But again, if you're talking from here and now in history, rates are relatively low in comparison to history.
Very low.
So, I think over the next 18 to 24 months, I think what a lot of people are going to see is that being early in something, whether it even be, if you're a long time investor, you've been alive since the 70s and 80s, and you've been buying equities and buying gold and even buying crypto of recent, being early doesn't make you a genius, and especially in an era where money was cheap and credit was cheap. But again, I think one thing I always sort of link it back to, and a big idol of mine, obviously, being Ray Dalio, number one of obviously the hedge fund manager at Bridgewater. We're coming into, and one thing maybe I don't think he talks about actually, because he talks about the monetary cycle, the political cycle, but maybe not even the social cycle of what people value. That's going to change, I think. But over the next 18 to 24 months, I think there's absolutely no reason why we see a pretty suppressed crypto asset pricing. That tied into the fact that they started to tighten monetary policy as we were coming into a global slowdown. That was always going to be catastrophic, and it's not going to stop. They will keep raising rates, and like I said, inflation. I mean, the call about it being transitory inflation last year was the worst monetary policy call in history. Let's just get that out there.
Quite hilarious.
It's scandalous, to be fair. I think it's going to be a period of time where, very similar to even pre the 80s and, like I said, the 1970s potentially. And I think what people don't quite realise, obviously I don't think this will happen now, but for example, if you see a big stock market crash, for example, like it did in 29, it took 2-3 decades to get back to that 29 level, that 1929 high. I don't think that will happen now. I personally think that the Fed will keep raising rates until they break something. And as soon as they break something, they'll lower rates. And as soon as they get rates back to zero, they'll restart a QE of some sort, whether that be in 2023, 2024. I think a lot of analysts and economists expect that. and I know a lot of people have now been saying, oh, it falls in line with the next halving and the next presidential election. It's like, yeah. But again, it's, that's fitting your own narrative to a certain degree.
Yeah.
But I think that's the main point. What people need to remember is that as inflation stays where it is, and if not higher, as they keep raising rates, they have to do more to try and tackle inflation, which they're not doing with a 75 basis point hike. Whether they do 100 or not they've given no forward guidance, as they didn't with the 75 bip hike. But it's going to be a particularly difficult time for the next 18 to 24 months, I think, in global markets. And I don't think that's helped with China's zero COVID policy, number one. And obviously the fact there's a raging war in Europe at the moment, which is not being nothing. Well, I would say not enough being done, but there's not a lot really we can do to a certain degree unless you put troops on the ground. And if you put troops on the ground, you're having a full-scale war. So yeah, it'll be a really difficult period, really. And I'm looking forward into October this year, because there could be serious problems across the world, both from an energy crisis perspective
and geopolitically, I say.
Geopolitically, but also from a food perspective as well. There will be, if it carries on the way it carries on, there will be a famine in Africa, based on grain not coming out of Ukraine and things like that. It's the biggest exporter of grain into Africa, in Europe and the world, and based on its natural resources as well, and that will actually probably continue having downward pressure on the euro, which is obviously now at parity on the dollar.
Yeah.
So
there's a few things there. Also obviously Uganda's just stumbled across, basically all the gold.
Yeah.
And potentially doubled the world's gold supply in one discovery. Of course, it's underground.
Sure.
But so
America's entered the chat.
Yeah. I did see that they've hired someone from a Chinese company though to help them extract it from the ground. So that'd be interesting. And China have a huge influence down there already. So it'd be interesting to see where that goes.
Really. I think
But America, 100%. We'll see those.
Age-old thing, though. I mean, yeah. If anyone who does follow Chinese politics closely, the time it takes. For example, if we were to go into Africa, for example, China, by the time we've done the T's and C's and China have already built 2 airports.
Yeah.
So if they look at it from that perspective, that they get things done. So why would we use you when you're obviously more costly? And when they could do it for a cheaper price and get it done. And like I said, for this example, get the gold out of the ground, for example. But again, that's gold's old age problem as well, is that?
But do they want to get it out quick? Because now Uganda's now stumbled across this sort of treasure. The quicker they get out the ground means pure supply and demand. Yeah. You want to probably try and take your time with it to keep gold with the price of gold. Is Uganda's in the interest to have the price of gold higher? So do they want to pull all this out as quick as they can? It's not going to be quick anyway, and then all of a sudden gold's double the amount of gold in the world. So it'll be interesting to see what happens there. But also be interesting on how, at what level can the Fed raise the rate until things become insolvent? Because you said until something breaks, but there's a difference in breaking something and making and seeing how far you can take it till something becomes insolvent. And for one, Jay Powell's already said a few things. He said that they would be open to another global reserve currency of some sort, because I think they kind of know where the world is kind of heading and people moving away from the dollar. Dollar denominated debt isn't looking as attractive as it used to be.
No.
You got and even Jamie Dimon said, look, we don't know the outcome of what's going to come here because it's never happened before. So it will be interesting to actually see how this actually plays out.
Yeah, I think one thing I think really fell under the radar, and just to touch upon when I talk about something breaking, we talk about the credit markets here. Once those, because the major thing to remember is that where they've been, printing money, they don't literally print the money. Yeah, they do it. Sure, yeah, for sure. Or they purchase bonds, T-bills, mortgage-backed securities. They're the only buyers, they have really been the only buyers of that market for a while. So when the Fed goes from being the only buyer of that market to then the only seller of that market, it's nothing. Yeah. So that's the biggest problem it has. Touching upon China, I think one thing that started really, or wasn't necessarily recently. It was probably the last 3 months. But obviously, Saudi Arabia accepting one instead of US dollars for oil imports and exports. That's, the dollar's power resides from its dominance in the energy markets, of which now people are now more willing to accept another currency over the dollar. Dollar's trading at about 108 at the moment, DXY. It will probably go to 120, 130. And that will obviously then devalue the euro and the sterling even further upon that. Touching upon, they're open for another currency. You're probably going down the rabbit hole of central bank digital currencies there, and things like that. But I think the world is so far away still from it on a technology basis.
Oh, definitely.
From that being a reality, I think the demise of the dollar has already started, and it started a while ago. But it's just a case of making sure that you try and position yourself appropriately. And
I think with the CBDCs, and I do feel that the sort of, I don't think personally there'll be another global reserve currency. I do feel like we're probably going to see like a multi-reserve currency, kind of like the SDR, but something structured slightly different. But like you said on the technology behind CBDCs, I was actually listening to a podcast about the sort of the distributed ledger technology, DLT, and saying that Boston, MIT run out the pilot program for the Fed coin, and they're not using a blockchain-based CBDC. Because you can use blockchain or non-blockchain. They've apparently leaned towards using the non-blockchain based CBDC, and I was thinking, why would they do that? And the only thing I can think of is if it's blockchain based, then it's completely open source. You can see. If it's non-blockchain based, you can tamper with the master spreadsheet, kind of like what they do now. So I'm not sure like where it's going to go, but that was strange to me that we're moving into sort of a very blockchain based overall system. I'm not just talking about payments, but everything. And for them to opt out of a blockchain base to start with, and I don't know, I thought that was kind of crazy.
Yeah, and it all goes under the radar.
Yeah.
Which is the most important thing for them. One thing I think the world needs to wake up to is that obviously in the war in Ukraine, obviously the Russians obviously pegged the ruble to gold again.
Yeah.
And then obviously if now other countries are accepting one is for oil instead of dollars, the two countries probably with the most history, with the US, for example, Russia with the Cold War, and obviously the trade war tensions in US and China, the two competing currencies at the moment against the dollar are now backed by commodities. The dollar is obviously then backed by, thin air to a certain degree, other than the confidence in the dollar. I've said for a number of years to obviously investors and friends, there's three things that can really cause the demise of a US dollar. That being a loss of faith in the government, which going into the next election, it's very likely that will happen. Obviously, I know a lot of people are talking about there not being an acceptance of the result, which is very highly likely. It's a loss of confidence in the actual US dollar, or it's a loss of confidence in the military. It won't be the third one because it's very patriotic to be in the military in the US, and it's a decent career path out there. But again, it only really needs two of those three to fall for it to be to lose its real status as the world reserve currency.
I definitely feel that from the political side, even with Sleepy Joe now, I do feel that people have kind of losing faith there. No direct offense, not that he's going to listen, but you find it hard to string a sentence together. That's the one side of things, and then the confidence in the actual US dollar. So they've been very good at defending the petrodollar up to recently. Very good. Any tensions that have ever happened in the Middle East, they're there, right? It's very different this time. Like you just said, anytime anyone's tried to sell barrels of oil in anything other than US dollars, they're first there. That's changed. I feel that they haven't been the same, and I don't know why.
Well, they have no military presence really in the Middle East anymore. Obviously, from the pull-up when they pulled out of Afghanistan.
Exactly.
Because again, I mean, to be honest with you, linking back to what you said about that, if China decides to invade Taiwan tomorrow, what are we going to do? Nothing. Like, off the top of my head, the nearest US military base is Guam, and that's 3 or 4 days sailing away from Taiwan.
So they've been arguing for years over this island in the South China Sea by the
Yes.
Philippines, over China putting a military base there and the US having issues with it. Obviously because of the whole thing with Taiwan. But so yeah, to be fair, I feel that, China and Russia are two sort of powerhouses that they don't really listen too much.
They don't. Yeah, they don't need
America. And yeah, so, and when you look at like what China's done over the past 40, 50 years is insane in regards to like growth. And I'm not sure, I mentioned it to Dylan the other day, but I'm not sure if you hear of the Belt Road Initiative. Is like a railroads, fiber optic cables, shipping routes in all around Asia, Africa, the whole world. And now China's gone from the States having the most trade partners like 20 years ago or 30 years ago. China's now got more trade partners than anyone, and now they're building this BRI. It's crazy, and they're kind of. I'm not sure if you read the book Economic Hitman, but in the book it shows you how like America and what they've done to countries, and China. It feels like they're doing the same. So they give Sri Lanka $1.5 billion to build this deep water port, a part of this BRI. They couldn't afford to pay them back. And now they've got a 99-year lease to control the port. And they've done it in Kazakhstan, Pakistan. So they're kind of taking that global power, whether people like it or not.
Yeah, China has its own internal problems as well.
Yeah, of course.
Main one being obviously the housing market over there. Obviously, it's seen the biggest boom out of any housing market in history.
Yeah.
But again, I think, you're right. I mean, doing what's similar to what America did for a number of decades, you're spot on. But I think what we are immune to, maybe in potentially, maybe I'll just use the demographic of the Western world, is that we don't live life in any way, shape, or form really from a social perspective similar to what they do.
Yeah.
Especially in Russia. I know, if you look at the Putin's acceptance rate, whether that be distorted or not, which I assume it would be, it still remains relatively high. Because if you look at the actual history of that region, it goes back thousands of years.
Yeah.
So they think that we, especially in the UK and the US, if we think we generally understand what is actually going on from a historical point of view in the Crimea, Balkans, and obviously in Russia itself, you'd be pretty ignorant to think you could solve it by putting troops on the ground there at the moment. But yeah, I mean, China is. I can't remember where I saw this fact, but again, I think. If you look at its obviously US Treasury holdings or its debt holdings, and you look at obviously then on top of that, if you look at, like you said, the military interventions they're now putting in place to have an invasion of Taiwan, which I'll probably go on record and say this, I'm 50 to 60% sure that will happen.
Yeah. In what time horizon?
Before Xi Jinping dies. It's his legacy. He's said a number of times that it's his legacy.
Yeah.
And I think the problem is the same with Putin, is that maybe it's men of a certain age. I don't mean to sort of, par people with the same brush, but, people look for legacy.
Yeah.
And when a country genuinely believes that country should belong to us or those people belong to us, because it's very complicated, especially with the separatist states where they identify themselves as being Russian citizens, they have Russian passports. And, it's very, very difficult to say what's right and what's wrong. I mean, don't get me wrong. Starting a war is not right.
No.
But again, if we believe in the West that we can really effectively impact with sanctions, I mean, we've seen what the sanctions have done to Russia. It's nearly nothing. The ruble's at its strongest level for a number of years. And like I said, with China, I mean, if you want to sanction China, the hit on the global economy will be so catastrophic that it would take decades to get out of that.
Yeah.
Which again, as a fund manager, you sort of got to be aware of these eventualities, but also have the balance to look at the here and now and what's available to you. But again, I think that's obviously my mentality towards all of that.
Yeah.
So, yeah.
And I've seen one of your previous articles that went out to the investors, and I know it's confidential, but this is something that I think you speak open about.
Sure.
Was the super cycle? Potential super cycle.
Yeah, sure.
I understand it's going to be delayed now, but do you feel that we will have a Bitcoin super cycle? And just before you answer, the reason why, if over the next, say, 18 to 24 months, macro side of stuff doesn't look great, probably heavy accumulation from funds, banks, etc., And even if you look at like what Luna was doing, they was basically buying more Bitcoin than was being mined at one point, right, to back the UST with. Now, if that continues to happen from an institutional level from TradFi, and we do come to the next Bitcoin halving, miners are going to be more incentivized, apart from selling Bitcoin to run their operation, to hold on to Bitcoin. So the supply of Bitcoin isn't going to be where it was. So if that is the case, of course, supply and demand, price should go crazy. However, do you feel there could be a possibility of, because of the amount of accumulation before that happens and a lot of the regulation that's going to come in and all the bad media that people seem to follow quite a lot, that we could have a delayed cycle, but then when the cycle goes, so not as traditional, halving happens, X amount of time after, we should see some positive price action. Do you feel it could be delayed and then go and then be a super cycle? Or how do you feel the next cycle is going to play out?
Yeah, it's a good question. I unfortunately have to give you an ambiguous answer.
Okay.
But I mean, from my perspective, when you talk about super cycle, it's something I sort of half mentioned to obviously the team every now and again. I have sort of hit it home, is that when people talk about it, it's sort of not made me laugh, but it scratched my head a little bit last cycle, because you see sort of very distinguished people in the industry sort of talk about the institutions being here, yada yada yada. It's like, this market is at the top, is worth $3 trillion, smaller than JP Morgan.
Yeah,
like there's no institutions really involved. Like there's funds like mine, and considerably bigger ones, such as Panteras and things like that. And obviously there are, especially US investment banks, being very open to placing trades, like Goldman, for example, and being involved in the space. But when it comes to a super cycle, I thought about this, recently. You have to correct me if I'm wrong, but again, the last Bitcoin is due to be mined in 2140-ish.
Yeah.
There's going to be a supply of Bitcoin until 2140.
Yeah.
So if you talk about a super cycle, there's an argument that the cycle or the super cycle won't happen until the last Bitcoin's mined. There's an argument for that.
Yeah.
In the meantime, in the next 4 or the next 2-3 cycles, because you are right, there is going to be a lot of Bitcoin taken off and just held in either treasury balance sheets or whatever. It could cause, essentially, there's not enough Bitcoin to go around to force the price to be sold down. But that, again, is you have to play that by ear as an investor, and you have to be aware of, realistically, the global macroeconomic perspective of it. Because, again, I think, as I've said a few times, I mean, with global slowdown, probably raging inflation for a sustained period of time now, I don't think you're going to get a super cycle next cycle or the cycle after that. But again, I think there will become a time, without being too morbid, maybe we might not be here, but that there will be a period of time where, there will never be another Bitcoin mined. So one Bitcoin is going to be worth, but that's then the age old problem is it worth $1? But we're talking in 120 years from now. So is a dollar still going to be here 120 years from now? Current political climate says probably no. So yeah, it's an age-old problem but with regards to just if you're a retail investor and you're thinking, okay, if I'm talking from about a super cycle perspective, so in 2 cycles time we could be trading, again, arbitrary figure, all right, 100k, okay, arbitrary figure. What is then the volatility percentage from 100k up and down? What constitutes a super cycle for that?
Yeah.
Is it a traditional bear market, traditional bull market of plus 20% either side? Or is it more or less within what you could assume G7 FX country fluctuations and things like that? Or is it based upon, how much US Treasury market would move, for example? It's an age-old question really at this point of when a super cycle will happen or if it could happen. But for me, and again, my background is obviously in commodities, if you talk about supply and demand, if the supply is being sucked up and there is huge demand, aka crypto's been integrated into everyday life, the demand is exponential. And the supply being short, if you're valuing it in dollars, there should be a consistent upside movement. But it's the biggest problem at the moment is how you regulate that.
Yeah.
Because again, I think you probably know better than anyone, being particularly from a sort of social media background, they can't regulate Facebook or WhatsApp or Meta as it is now, sorry, or anything like that. They can't regulate big tech. How on earth are they going to regulate crypto? And then
move so quick.
And then metaverse. How are you going to regulate?
Yeah.
It's it's a problem they're going to consistently have. But for me, I think again, you can't really regulate necessarily
No.
the assets themselves, but you can regulate centralized exchanges. You can regulate
Which would make sense.
funds, for example. Yeah, exactly. Because investors, as we've seen with Luna and Celsius, investors need protection.
Yeah.
Because with all due respect, there's a lot of investors out there, especially newer investors, maybe potentially young, maybe speaking to the younger audience here, is that you made a lot of money trading an asset which you didn't know very much about, which was going up only because they were printing money into oblivion with low interest rates. And now as the market is being stripped, what do they say? Is that when the tide goes out, you see who swims naked.
Yeah.
Right. But those people are the people that need protection. So I think those are probably the major barriers for a super cycle. But
so also, do you think people underestimate institutional money? And the reason why I ask this is because we've seen what JP Morgan's done to silver for a very long time.
Yeah.
Even all the WikiLeaks documents come out. There's no surprise what was happening there. And also like with the De Beers, with the diamonds, we've seen this happen a lot of times. Do you think people underestimate institutional money? Whereas a lot of people are like, we can't wait for it to flow into the market because it's going to bring all this capital to the market and the capital flows. But at the same time, if that does happen, can they do the same to Bitcoin as they've done? What's your thoughts on that?
Good question. Again, when all the Bitcoin's been mined, why not? Because if you're still pricing it in dollar terms, if you've still got an unlimited amount of dollars, you have an unlimited amount of purchasing power up and down, or shorting or going long. So there is that possibility, but again, because of the regulatory problems we have at the moment, there is, I don't think, a real issue of that. There are obviously larger funds, aka Citadels, things like that, and Point72, I think, and things like that, who obviously I believe obviously potentially caused the Luna crash with the antics they got into it. But I think one thing I think people forget is that markets themselves essentially epitomize capitalism. They epitomize democracy because it's a free market. If you want to go long, you want to go short, you have the ability to do so. If you constrain that and you say these people aren't allowed to move this much capital into this market, there's no difference between that and just having a totalitarianism regime to a certain degree. But I think from an institutional perspective, there could be, and there might very well be on a very small aspect now. Because I have to speak to some of the other traders in the industry. It's very easy to see where retail investors can get sucked into the market, aka 42.5k, 30k, 20k, and like I said, I think a lot of people, especially in crypto, is because they are not professional investors or not fund managers. Then they invest with their emotions and they think, okay. And it sounds ridiculous, right? But 20k is a round number, so it's got to hold up here. And it's like, no, it doesn't. Do you know what I mean? So I think from an institutional perspective, from an actual longer term perspective, can they control it like they have done in silver? Yes, that's a short answer. As long as the money supply is always there. From a short term perspective, because of the regulation and because of the problems that you really get, no, I don't think that. But it's definitely something that, as we've just said, if the super cycle happens in 3-4 cycles time, whatever figure people want to put on it, there's always that possibility because it's a public market, it's an open market. So yeah. And at the end of the day, if you're the biggest player in the market and you can make money, why wouldn't you? That's what they do. So that's bread and butter, right?
Yeah. And trillions of dollars are moved in the FX markets on a day-to-day basis. So this is like penny change.
That's what people don't realize. Yeah, that's what people don't realize. I don't think people quite fathom how much money is actually in the system.
Yeah.
Because the money you see in your bank accounts, okay, fine, that's XYZ amount of trillions. But if you're then going to add and look at the treasury markets, FX markets, equities, we're talking quadrillions of dollars in the system, which a lot of it is realistically unaccounted for because it's printed by the central banks, which then they buy their own treasury bills.
The amount of claims on all the different assets as well, it's just inflated, and it's just leverage, right? But leverage is what,
Yeah.
people's benefited from leverage for years and years, and they've been
They
happy
have.
while they've seen the house prices go up. So eventually, the can't be kicked down the road anymore, and
Well,
it lands on. Well, I'm not
until
saying
you make up until you make up this new product,
which they probably
this new strategy. We're going to see it in the eurozone at the moment. We're waiting for obviously the anti-fragmentation tool that the ECB. I was actually abroad when I heard that news. You know, and you just think a new tool.
Yeah.
Do you know what I mean? Like, what does that consist of? You know,
Yeah.
and I think, you know,
Let's just kick the can down again.
yes,
Yeah,
because,
no one wants it to fall on
because
them.
from a political standpoint, you can't be the chairman of the central bank, you can't be the prime minister or president when we see an absolute catastrophic,
No.
because then that is your tarnish.
Yeah,
You were the man who let this system fail, and that can't happen to anyone.
Yeah, nobody wants that.
No one wants that.
So
Yeah.
I'm gonna finish on a bit of fun, right?
Okay.
I'm gonna name a few names,
Okay.
and in as short as possible you can, sentence or few words. You got to pick the words of choice, okay?
Oh, we want my describing personality here. I want just whatever.
Just what you think of the person's name.
Okay.
I say. Right, you ready?
Yeah.
Do Kwon from Terror.
Bernie Madoff.
Good start. Bit Boy.
Same.
Ray Dalio.
Icon.
Raoul Pal.
Hype man.
Plan B.
Which have to diverge here. Very interesting. This is what I was talking about earlier, about people that can't let their own strategies go. So I'm going to say he holds on to he's has a serious case of hopium on his plan B. So yeah.
Okay, well, that was the last one. So
Okay,
cool.
good.
Well, look, it was obviously really appreciate you coming down. I could have talked for hours. There's so many more things I want to talk about. So we'll have to do this again at some point.
Yeah, absolutely.
But definitely, yeah, like I said, it's been good to see you grow the fund. And looking forward to seeing where it is over the next 5 or 10 years as well. And it's good to see sort of a young hedge fund CEO really drive, especially like a market that I think needs someone younger driving it. So yeah,
thank you. Yeah, no, I appreciate that. It's because it's sometimes, and I'm sure your younger audience can appreciate this. You sometimes get written off for being younger, but at the end of the day, you let your performance speak for itself. And I think over the next 5-10 years, I think we'll still be in the game. We'll still be a big player, and we'll have multiple different things available to us. So, but yeah, thanks for having me. It's been great.